Thank you, everyone. I'm very excited to be here and speaking with you. I'm going to walk you through Wishpond and look forward to the questions at the end as well. So a little bit about the company. We founded the company back in 2009. It's been about 12 years now. And really, Wishpond is an all-in-one marketing platform that we bring all the different technology tools that a business needs to succeed online with acquiring new customers and generating leads under one single umbrella. To give best chance of success to primarily small business. We have some Fortune 500 clients as well, but our bread and butter and focus primarily small and medium-sized businesses. We have a team of 140 or so employees and contractors. About 45 are full-time employees in Canada, and the remainder are full-time dedicated contractors around the world, generally in lower-cost geographies. We've been growing at about 35% year over year for the past few years, and now our growth has accelerated tremendously. The analyst forecast for this year for us is more than 70% growth at around $13.4 million of revenue and $1.2 million of adjusted EBITDA. We're currently sitting on a cash balance of $11 million, and we're running profitably, so that money is primarily meant for M&A. We serve close to 3,000 clients from around the world, 70% of them in North America from different industries, and I'll get to the details of that in a future slide. So a little bit about myself. My background educationally and vocationally is in computer science. I was the first programmer at Wishpond as well, was involved in a number of technology startups back in the day. I got my MBA also from UBC here in Vancouver. And started Wishpond back in 2009, and obviously wore many hats in the development team, marketing team, and sales team, and different roles at the company. My partner Hussein Malik, that funded the company when we were private, he also founded two technology companies and sold one of them to Lucent Technologies back in 2000. Another board member, Olivier Vincent, we're very fortunate to have also on the board. He grew Can Pages to about $100 million of revenue, sold it to Yellow Pages for $225 million, has been a serial tech entrepreneur. Arinder Mahal, another board member of ours, has a tremendous amount of background in public market and capital markets, and from Dundee, Deloitte, Echelon, and so forth. And brings a lot of that wealth and experience to us. I'm not going to go through everyone else, but I guess one more to mention, Juan Leal, our CFO. He joined us January of last year, and before joining Wishpond, he was a VP at KPMG Corporate Finance Office in Vancouver, and his day job for years was basically dealing with M&A transactions on buy side as well as sell side. So that's very valuable for us right now as well. So high level, what is the problem that we see in the market? You all know that consumers have shifted their focus to online and spending time on their mobile devices, social networks, and so forth. And businesses over the years have tried to follow suit, some with more success and some with less. In the case of small business, it has been especially challenging because generally they lack resources, whether it's financial or manpower, or expertise to do this successfully. And digital is actually complex to get success online, especially when you're competing with some of the best funded and largest teams in the world. And then the options that they would have to be able to be successfully acquiring customers online would be going to a marketing agency. And these marketing agencies generally would be $5,000 to $10,000 retainer fee plus ad spend a month. For the vast majority of small businesses, that's cost prohibitive. Or they would have to use a whole bunch of different marketing technology tools and pay multiple subscription fees. And if they're not experts still, they will pay for all of these tools, not be able to integrate them well together or get the return on investment that they need. So what it is that we do at Wishpond, it really has three aspects to it. One side or one pillar of it is that we have developed marketing technology tools over the years, and now acquiring some as well, from all the different things that a small business needs in one single platform so that they don't have to go and piece together things from different platforms. Second element of Wishpond value proposition is that we also bring marketing services and expertise help, human help as well, so that they don't have to worry about how do I still get success. We can give them account managers. The account manager has access to designers, copywriters, ad specialists, and so forth to give them best chance of success. And we still do that at 65, 70% profit margins. And the third element is we make it affordable. So if they would have had to pay $5,000 to $10,000 or and above at a marketing agency with us, they can pay $500 a month and get all the tools that they need that they wouldn't have gotten elsewhere with an agency, but they also get services and expert help as well. So some of these numbers I've already mentioned. I think one of the elements that's quite important is that we have more than 30 native software integrations to other platforms to make adoption of Wishpond easier. One of the top integrations for us is with Shopify. So this allows, for example, some Shopify merchant who has set up their storefront with Shopify to now use Wishpond to drive traffic and interest and get customers to it, or re-engage their existing customers, or set up shopping cart abandonment campaign and so forth, to actually be able to get customers. And it's a very deep software integration. All the events that happen on the Shopify side are fed back to Wishpond. There are reports and analytics on the Wishpond side to see what the attribution is and how much revenue you generated through the campaigns that you generated through Wishpond. Another element I think that is noteworthy here also is you see 285,000 blog subscribers. Over the years, we've invested a lot of time and effort and energy in inbound marketing. So writing ebooks, infographics, webinars. We are actually published as part of some of the marketing textbooks that are taught in universities in North America. And because of all of that, we get a lot of organic inbound traffic and interest coming to us all the time. And we don't have to advertise or spend money to get that. That's a large part of the war chest that we have in terms of marketing and sales. Now, that's on the inbound side. What is even more powerful and scalable than that is our outbound sales, where it's more scalable and more predictable, and we can invest money to grow it. And in a future slide, I'll talk about that. But the inbound side is also great to have. In terms of competition, there are a lot of different marketing tech tools out there. Vast majority of them are silo players that might be concerned with landing page creation or part of marketing automation or email marketing, pop-up contests, CRM, so forth. And there are very few that are all in one. But our difference basically with the solo players is that we are that all-in-one play. But in addition to that, we also make it all cohesive. We give them also the services help so that they have the best chance of success, and we bring the cost to something that actually makes sense for an average small business. Our customer base of over 2,900 paying customers is from a wide array of different industries. The top one is e-commerce for us at around 15%. This is slightly old now, this chart, especially over the past year. The e-commerce has been the fastest growing one for us by design, as well as circumstances of the world and e-commerce booming in the past year. And then after that is marketing agencies, then B2B and so forth. And as you can see here, 68% of our revenue comes from US clients, then 14% Canada, and then 18% is the rest of the world, such as Europe, Brazil, and so forth. In terms of the business model, substantially all of our revenue is subscription-based recurring revenue. For our fully managed customers, the contracts are 12 months and they renew automatically for successive annual terms. Gross margin of 65 to 70%. On the bottom, in the pricing plans, you see basically 4 different plans here. The first 3, anywhere from $75 to $250, are for teams that have their own marketing, professionals or designers, and they know how to use the technology to get the best chance of success, and they're fine with that. They can just use the self-serve platform there. For the business owners, your average business owner who is either too busy or doesn't have those, then generally they go with the hybrid model, the fully managed one that starts from $500 and above, and then they get the technology as well as us helping them. Financially, we've been growing solid 35% year over year, and this year on track to grow more than 70%. And that might be even on the conservative side, but that's what the analysts are saying, and we prefer not to put our own forecast out right now. 2019 was the first year that we became adjusted EBITDA positive. 2020, the estimated, based on the forecast again, is 400,000. This year, 1.2 million and growing. And as I mentioned, we have currently more than $11 million in the bank, and we're running profitably. So we're not really using that money for carrying the old Wishpond. Really is meant to be invested into growth and especially M&A. So we made 2 acquisitions since December that we went public, so slightly more than 3 months now. And in that very short period of time, the first acquisition we made was a company by the name Invigo. Invigo makes about $2.7 million of revenue with 20% EBITDA. And I believe we purchased it at very reasonable, valuation, expected to be about $3 million. And what's very fascinating about Invigo is that it's a marketing technology and services company that is focused on healthcare. So that is an industry that we didn't have expertise in. It opens a new channel for us. And also, it had a platform called Evergenius that has CRM functionality, mobile marketing, call tracking, reputation management, social media management, all of those things that now we can integrate into Wishpond and make our all-in-one platform even stronger and even more all-encompassing. The second acquisition we made was PersistIQ. PersistIQ is a sales automation platform based in San Francisco. And this is a company that we use for our sales team for a number of years, and we really liked it for the simplicity and the functionality. It's one of the best ones that we know, and the reviews on it are always great. People love it. Annual run rate in terms of revenue is $1.1 million US, or 1.4-ish, with 20% EBITDA margin. So again, even on the technology side, we were careful to acquire a company that's profitable. And expected payment for this acquisition is about $3 million. And I say expected because there's an element of earn-out in both of the acquisitions as well, based on future performance. Since we went public, our listing date share price was 75 cents, and it has grown substantially. It kind of overshot a little bit and then stabilized at around 1.77. I think today might be 175, something like that. But definitely has more than doubled and has, had a lot of interest. We believe still is very reasonable, and in fact actually has a lot of room for growth, with 70% growth expected this year, the analyst forecast, and the target price for the stock is more than $3, and right now is 177. And we're going to continue growing the business the solid way we know how to, through organic growth as well as acquisitions. So that's everything I wanted to cover. I think the highlights are that, we are operating in a market that there are millions of small businesses that need our solutions. We have a scalable way of growing and, and reaching them. So it actually takes us $1 investment in sales to grow by $3.5. So LTV to CAC ratio is 3.5 to 1. For every $1 we invest, we get $3.5. And it's just a matter of investing in that, as we've been doing that, and constantly as we grow our sales team, our revenue very quickly also shows up like that. So there are millions of small businesses around the world that we can serve. We have a scalable and profitable way of reaching them and selling our solutions to them. We have a diversified customer base with very, very little economic dependence on individual major accounts. Technology enabled and SaaS model, one-stop shop platform, strong management team with long tenure in market and technology space. and a lot of growth ahead of us in terms of acquisitions as well as organic growth. And we've proven over the years that we know how to generate positive cash flow and grow responsibly. So that's basically what we're going to continue doing as well. And in terms of the acquisitions, generally, we do them in terms of setting them up so that there would be a portion of cash, portion of stock, and portion of future earnout, so that there would be incentive for the leadership to continue operating well. But also we can handle and manage our cash that we've raised responsibly. So if 1/3 is going into cash, let's say investment into the acquisitions, 1/3 in stock, and 1/3 future earnout, it means that we have $11 million available that actually gives us war chest to make $33 million of acquisition, as an example. Not all cases are the same, but that gives you an idea. So that's everything I wanted to cover. We'd be happy to answer questions.
Thanks so much. I'm just going to remind everyone the Q&A box at the bottom if they want to ask a question. I was just going to kick it off. So would you be able to give a breakdown? This year you're growing 70%. How much of that is going to be organic versus inorganic from the acquisitions that you guys completed?
Yeah, that's a very good question. So let me preface that by saying that the 70% is the analyst forecast, not our forecast. So I'll explain their rationale for the 77%, for the 70%. Their rationale basically right now is Wishpond historically has grown by about 35%. So let's assume that it will continue growing 35%, which is not the best assumption because we're actually accelerating. We have money to investing in growth and sales team and all of those things. So it actually is accelerating. But so the second part of their assumption is Wishpond has already made 2 acquisitions. If you just add those 2 acquisitions to the organic revenue plus 35% on the organic side, what will it be at the end of the year? So the assumption is not taking any future acquisitions into consideration, and is not taking accelerated growth into consideration. So obviously, we expect to do 3 or 4 more acquisitions this year, and we expect to, invest in, expanding our sales team quite substantially as well.
So we think the 70% is on the conservative side, is what you're getting at.
Yeah, for sure, for sure. I mean, 70% is still very impressive, but yeah, it is with those assumptions.
Yeah, well, you guys have already done so much in such a short time of being public. So definitely congrats to that. For the M&A, I guess, strategy that you guys are pursuing going forward, is it going to be along the same lines where you're looking to, integrate more verticals or more solutions into your platform, or will it be buying customers, or how do you envision that?
Yeah, great question. So we have basically 2 different areas for our acquisition targets. One of them is marketing technology companies that give us the functionalities that we need. But even in that case, we would want those with traction and customers and, profitable. On the other side is marketing agencies or service providers that are focused on specific niche or vertical that we don't have the expertise in, and it can kind of become our, beachhead to grow into that space and find a footing. So, the case of Invigo, for example, now it allows us to actually, put a growth plan around getting into the healthcare market and healthcare marketing. If there was, this is completely hypothetical, but an agency that's focused on car dealerships, that actually allows us to now go into that market, bring our technology into it, so that we can actually transform them from a services company to services and technology company, similar to us, that hybrid model, recurring model, more sticky, subscriptions, and now expand into a market that maybe in the past we haven't had access to.
So what's your visibility, or what's your M&A kind of funnel pipeline look like? Like, how many of these businesses have you guys identified that are out there, and how much running room do you guys have to go on the M&A side?
On the marketing tech side, there are actually thousands of marketing technology tools, but the ones that would be relevant and in the market and we would be able to work with is a smaller number. On the agency side, there's tens of thousands of them in North America alone. So currently we're looking at certain revenue mix, certain characteristics in terms of the verticals, for example, and some of the specializations. We have a very strong pipeline with various different parties in different stages. Some LOIs are already, in the works, in different stages in the past. But we're also very careful in the decisions we make. So we want to make sure that in the due diligence phase, and our management meeting, the evaluation we're doing, we bring those that we're really excited and they have a lot of strategic value to the company, and we're not in a rush to just acquire them for the sake of acquiring and adding revenue.
On the competitive side, is there any, kind of one or two companies out there that you guys would identify as your largest customers, and how hard would it be for competitors to replicate what you guys have done?
One of the companies that would obviously be a competitor would be HubSpot, but there are a number of differences. For example, HubSpot has an all-in-one approach as well, but their price point is on the higher end. So it actually starts around $800 for typical marketing platform use, where ours starts at 500 plus the services. Their 800 doesn't have the services. So they are targeting more the mid-market. Ours is more on the small side. Another company that I've seen, private company, I think they're doing quite well, is Marketing 360. Last time I checked, I think they were making about $100 to $200 million of revenue with 10,000 small business clients. But the beauty of the small business space is that because there are millions of them, when we're reaching out to these small businesses, it's very rare for us to have collision and for people to ask us, oh, but how do you compare against this other player? And vast majority of the ones that we're reaching out to our outbound sales are looking at us versus doing nothing. It's kind of a bit of a blue ocean in that sense, as opposed to just going after the CMOs that are very familiar with all the different tools in the market.
I'm just going to jump to one of the audience questions. What is your operating cash flow, and what is your forecast of cash flow on your revenue for 2021 and 2022? Do you give those?
I don't think right now we're disclosing that. I think for 2020 you're going to see that soon. By end of April is the deadline for us to actually release our annual financials, so you'll get a better feel for that. But as I mentioned, I think what we can share is that for the year, our forecast is around $1.2 million of positive EBITDA. That's what I can share.
And then just lastly, so your main market that you're serving, the smaller to medium-sized businesses, can Wishpond scale up to serve some of the larger businesses, or do you have clients already that are kind of more blue chip, Fortune 500? Are you going there? What's your plan?
Good question. So we do. We actually have some of the largest organizations in the world that you can imagine. Some of them I cannot share the name. One I can mention because I think at some point we did actually announce it, was Walmart. Walmart US, the head office, not small, location or anything like that. A lot of different ones, some airlines, some, other ones that, again, I prefer not to mention right now. So we do serve them. Some of them, when they launch a campaign, they come to us. Canada, for example, Canada 100, the government of Canada, for the 100th anniversary of Canada, they used us for running their email marketing campaigns for a number of months. So we do serve them. We have the capabilities. The technology scales well. It's robust, scalable, it's secure. The technology, the services side is also very mature, and we have the expertise for it. Having said all of that, the gap we see in the market, though, is more on the SMB side. They're not very interesting to most of our competitors. They're underserved. We have a scalable way of reaching them and profitable way of servicing them. So that's where most of our attention is, even though when inbound, some of the largest companies come to us, we do still serve them as well.